everyone. It's a real pleasure to be with you, and that should be a fascinating panel. So, Kata, you already introduced the speakers, but I'm very happy to welcome Serey, Sobnandu, Lajos, and Fabian. And as part of the digital payment specialization, actually, I've had the chance to interact quite a bit with them because Fabian was the co-program director of the specialization. And Serey, Sobnandu, and Lajos were contributing experts. For the main thread today, I think that from what Gergely said, I think Gergely really set the scene really well. I think in terms of the scene, clearly, payments for a very long time were an overlooked area of financial services. I think it was clearly important, but it was really seen as just pipes and not really something that was on a lot of people's priority. Gergely has shown it has changed considerably over the last few years, mainly because of digital. And in the top 10 financial institutions today, 5 are in the payment space. Before, they were all banks. Coming from the fintech startup side, we also know that it has had an impact. The largest fintech startups are in the payment space: Square, Stripe, $100 billion. And this morning, just this morning, also, you might have seen that Molly raised $800 million at a valuation of 6.5 billion, which I think, Fabian, you'll be very happy with this kind of information, because the former CEO of Molly also teaches on the course, and of course, Bitcoin, blockchain, etc. So we know that payment is very, very big. And so we've gone from overlooked to very hot and being an integral part of the whole transformation in digital finance. And of course, as part of this, the role of regulators is even more important. And to me, it seems that, and I don't know if our panelists would agree on this, it seems that the role of regulators has also changed over the last few years, and they have been more involved in the payment industry and driving initiatives which perhaps we might have seen led by the private sector before. So for today's discussion, I would like really to go through around 2 different topics. First, what is the involvement of regulators in the payment space today, and what has changed during the last few years? It's of course very important for regulators, but it's important for the whole ecosystem, whether banks, fintech startups, tech companies. This is really key. And the second topic I'd like to discuss about is, of course, CBDC. As Gergely said, what is this future of CBDC? So before we jump on this, remember that let's try to keep it very, very interactive and ask questions. So there's a Q&A button, which I can see here. So for any questions that you have, just put them on the Q&A. And as we go along, I'll try to use the Q&A and ask you questions also. So let's just jump directly. And perhaps if I can ask you, Sobnandu, the first question on the involvement of regulators and central banks in payments. Is it true that it has changed over the last few years? Is it true that they have been more involved? What is your view from the MAS standpoint?
Thanks for having me at your panel, and it's always good to connect with all of you and to our friends in Hungary. I wish there's no COVID, and we would have been there discussing this topic in Budapest. Well, the question which you have laid down in terms of what is the role of regulators in this space, I think in Asia, in particular Singapore, we have taken a very aggressive stance in this space. I would say that from 2015 to now, if you look at what has happened in the space, that there's a rise of public good in the payment space, which may not be true in Europe or other parts of the world, where there's a desire from the public policymakers to build public infrastructure to make payments seamless, secure, affordable. And as an example, in Singapore, we put together a series of public infrastructure from Pay Now to SGQR, consolidating the QR experience. and opened up our faster payment system to non-bank players. So there are a few outcomes which came out of this initiatives. One is the payment became affordable. Today, you can move money between two accounts in Singapore in 3 clicks at a zero cost. It is seamless, it's secure, runs on a banking rail, and it is perfectly fine. And it's actually solves the issue which all of us want to make payments seamless and safe within the construct of a regulated environment. But that's account-to-account transfer. What about merchant payments? How do we improve the merchant payment acceptance also similarly seamless? We saw a proliferation of QR code of different companies building wall garden. This is my payment QR. This is my payment QR. They don't talk to each other, which is a mess in many countries. In Singapore, we put together a public infrastructure called SGQR. Every payment players who have a QR payment must adopt this common QR method. And that allows consumer to just interact with one QR. Doesn't matter you are talking to Alipay or WeChat or XPay, YPay, ZPay. A single QR which made the QR interoperable. So the second point I'm trying to make is that regulators are putting infrastructure and processes in place so that payment systems are interoperable. The third piece is around, I would say, okay, you have done your payment system infrastructure upgrade. So now time to think about connecting outside. As you know, payment systems are not connected globally to each other. And that's the reason why when you send money through banks, an average cost is, according to World Bank report, is between 10 to 15% for every transfer. So we took a call here that can we connect our payment networks to other country. So we started a program by which we'll connect our system to another country. Our first project was with Thailand, where we connected our payment infrastructure called PayNow to Thailand payment infrastructure called PromptPay. Now, these two infrastructure are identical in many ways. Of course, technology is different. Both allows their respective citizens to use mobile number or national ID to, I think Thailand is only mobile number, but Singapore, you can use mobile number and national ID to pay each other. You don't need to know what's below that account details, nothing. As long as I know your mobile number, I can send money to each other. So can somebody from Thailand connect to somebody in Singapore, or Singapore to Thailand? Just knowing the mobile number, send money overseas. So it took us 2 to 3 years, and we connected this year Thailand with Singapore. And today, people from Singapore who have an account with any bank can send money to Thailand at 3% cost. From 15%, we are down to 3%. So my question is, can the 3% can be down to sub $1%, less than $1? Yes, it's possible. But that links me. There are a lot of regulatory activity going in the digital currency space. Can a wholesale digital currency reduce the settlement cost between two countries? My bet is that if countries work together on wholesale digital currency, they can reduce that 3 to 5% cost to less than $1 for a cross-border transfer. I think that's the sweet spot which regulators are working through experiments in this space. So I'm trying to connect the dots of digital currency, payment infrastructure, and how they're getting connected from a regulatory perspective. But why do we do this? We do this to ensure that in a digital economy, these are foundational infrastructure. It's like roads, it's like hospitals, it's like airport. If you want to be a digital economy, there are 4 things foundational to a country. One is a trusted digital identity, be corporate or individual. Second, an interoperable payment system. It is foundational. You cannot have a digital economy if you don't have an interoperable payment system. Third, a trusted data exchange, which means any data we exchange between two parties, it has to go through a trusted data exchange so the consumers are protected from data abuse. And the fourth is an electronic consent system, which allows every citizen to share data by consenting, not by some dubious shady method of taking your data and you don't know why your data has been taken. So these are foundational. So that's what other regulators are interested, and also to ensure competition is fair and it's affordable to all the citizens. So just I will just keep my case here. We can come back and examine from a regulation perspective later on.
Thanks a lot, Sanandu. That's really insightful, and you did really answer really well. The why of why regulators are more involved, today in payments, because of this digital economy. Perhaps now let's get the views of Sarah. What do you think of this in terms of the involvement? Is it different today, and where does it come from?
Thank you, Hui, for having me. I've been working with the central bank for more than 20 years, and during my first years, the payment system oversight was a very tiny division within a bigger sort of department. And very recently, and I think probably after the financial crisis, when the ideas of financial inclusion has been promoted and been discussed at the G10, the G20, and it's really started to kick off in, I think, 2019. The ideas of trying to promote financial inclusion, get everyone included. That's when we start seeing a lot of technology innovation coming about. And if you look at a lot of the technology, the fintechs that are out there, one of the premises that they made, and probably the biggest premise that they made, is that they will promote financial inclusion. And so what I personally observe in Cambodia, at least, is around 2010, so that about 10 years ago, when we saw this development in the fintech space, particularly here in Cambodia in the payment, we decided that we need to have a proper function in place. So we set up a separate sort of dedicate a lot of staff and set up a department for payment system oversight. I think that's when it kicked off, because we saw that there were a lot going on in the market at first, and we were afraid that we were not able to catch up with the fast development, particularly in terms of consumer protection. And then we also realized that there's a lot of potential in promoting this space and trying to make it cheaper, more efficient, and ensure that we can then bring in financial inclusion objective closer. So I'm going to stop here for the role of the regulators.
Great, no, thanks a lot. And so you added this point, which is really interesting, which is also that innovation is happening very, very quickly, from a lot of different players also. So central banks and regulators also, have to act, quite, quickly. Now let's jump, to Hungary, from Southeast Asia. What would be your view, Lajos?
Thank you for the invitation for this panel. I am coming from a country which 30 years ago was a socialist country. The regime was quite different. At that time in Hungary, we didn't have a two-tier banking system. It was a very simple banking system. Only the central bank was allowed to do a lot of things, and the central bank kept the accounts for everybody in the country. So basically, the central bank itself was a payment system, because every company had an account with the central bank. So it was 30 years ago. Of course, the life has changed after the transition, but the attitude did not change a lot. This is what I see in Hungary, at least. I am in the payment industry in Hungary since '98. And my experience is that since this is a network industry where we have a lot of players on the scene, and they should cooperate each other, but in the meantime, they have also other issues with each other, so they are competitors. Therefore, the voluntary movement development is very difficult, and therefore we had to facilitate the development of the payment system in Hungary in 2010, in 2015, in 2019. So still, I don't see that the banking sector from itself would move forward. And therefore, we had to regulate a lot of things in Hungary. And of course, we have seen a lot of market failures as well. So when we waited for the banking sector to react or to be proactive, we have seen that they didn't move. So, and in the meantime, I think that the payment itself, or being able to make a payment, became like electricity or became like water. It became a utility. So, like a public good, it was already mentioned previously. So therefore, I think the regulators has to assure that this utility works well. And if it doesn't work well because the players are not proactive or the products are not there, then somebody has to move the whole industry to somewhere. And in Hungary, this became the Central Bank of Hungary. And if I look at the European region, let's say, 10 years ago, we had only a few regulations in Europe, and they were not regulations, basically, they were recommendations, so they were directives. If you look at the regulatory landscape of Europe today, you will see PSD, I mean Payments Service Directive, Payment Accounts Directive, Interchange Fee Regulation, SEPA-ND regulation. So a lot of regulation came on the market. Because if you have a lot of countries in a community, like in the European Union, then you have to somehow a much bigger problem than domestically. So in Hungary, I have to convince only 40 banks to do something. In Europe, you have more thousands of banks, and they have a very different background. From Portugal to Greece or from Germany to France, they are very different. So therefore, it's not a real expectation that they will do something together from their own. And this is what we see in the regulatory landscape, that the European regulator, I mean the European Commission, together with the European Central Bank, came up with a lot of regulatory initiatives. And now still, there is a lot of regulatory initiative which will come in the next 2-3 years. So it's really, I wouldn't say that it's an over-regulated issue in Europe, but it goes into this direction that we have a lot of more and more regulation on the landscape. In Hungary, this is not new. We had a central bank decree for the execution of payments already in '95, which covered most of the issues in the payment landscape. And of course, since the new European initiatives came into force, we have integrated and implemented them in Hungary as well. But the Hungarian players are used to this kind of regulation. What I see in Europe, that the European market players are not used to this kind of regulation, and therefore their life became much difficult in the last couple of years.
Thanks a lot, Lajos. That was really interesting. And you mentioned, I think, the same as Sopnandu also, which is that payments is becoming, or is an essential part of a modern infrastructure, and someone needs to put it in place. And Fabian, what would be your view on this? Coming from Abu Dhabi, but I guess also from globally in general.
Of course, and let me first say hello to Sopnandu, because the last time we met face to face was an eternity ago. So it's happy to see you on the screen. And I'm a bit the weirdo on the panel, in the sense that I'm not representing a central bank here. I'm representing myself, and I'm advising ADGM in Abu Dhabi. So I can give you a take on the Middle East region, but I think all credits and go to the central bank.
Your previous organization, the SWIFT.
What?
You can represent your previous organization, SWIFT.
I will. That's what I was going to say. So for those who don't know, I used to work for a large infrastructure in B2B payments for some time. And I think what has changed is that I remember when I started to talk about payment in the 90s, it was closed world. You had the card world, MasterCard, Visa. You had the cross-border B2B, the SWIFT area. You had the retail, local, low-value payment, ACHs, and those people barely talked to each other. They didn't have to. They were in different rooms. And I think this digitalization, this everything that the three panelists have been saying before, have created a kind of total overlap between all those infrastructures, all those rails who used to serve very specific needs. They kind of come to a point they were realized because of instant payment, because of e-commerce, because of digital currencies, because of everything that has been said, that they are at a point where, you know, there are many types of infrastructures, but they all kind of overlap big time. When Sopnendu said that there is no connectivity internationally, there is for B2B payments, but it was built at a time where there were specific requirements, and speed or total cost of ownership was not maybe high on the agenda at the time, because it was B2B, big amount. But the more you come into retail, the more you come into e-commerce, the more you come into SME payments, the more you realize that the infrastructure need to evolve from everything that was said before. And I think that's the reason why the regulator wants to make sure that customer protection is there, that the resilience of the system is guaranteed. And to me, one of my horrific constatation is that the cost of fraud, the impact of fraud is increasing. So if you look at statistics, there is more fraud today than it used to be. There are more fines from regulators. There's more at risk because for whichever reason, and I think digitalization is kind of putting some oil on the fire. So I think one of the role of connecting different markets, like Sopnendu was mentioning, which is a great thing. And by the way, the Central Bank of UAE is working a lot with other central banks in Asia and in the Middle East to connect, especially on digital currencies, or to connect to infrastructure via Swift GPI, so all credits to them. But I think there needs to be more connectivity between infrastructures, more data exchange to the point of Sopnendu, and more secure data exchange to address fraud. Because the only way to combat fraud is to have exchange of data across different networks. If you only have fraud-related data from one network, and you don't have fraud data from other networks, from ATMs, from e-commerce, and you don't put that together, it's very hard to address fraud end-to-end. So I think the role of regulator to me is also to favor more standards and more data exchange and more policies in ways to combat AML and fraud, like per G20 and BIS recommendations. And I'll stop there for a minute on that.
Thanks a lot, Fabien. So we've talked about the fact that regulators, central banks are driving more transformation, especially because payments is such an essential part of a digital world. Let's dive deeper. Let's look at some real initiatives, and perhaps Sarah, if I can invite you to talk about Bakong, and what is Bakong, and what were some of the key learnings from this initiative?
Yeah, I think we were talking about interoperability, and as I mentioned earlier, in Cambodia, we started to see a lot of payment service provider emerging, and at the same time, when banks see how successful payment services can be, they also started to jump in to that space. And so what we saw was pockets of players here and there isolated and not talking to each other. So one thing that we did even before Bakong was introduce an infrastructure called Cambodia Share Switch, which create interoperability for chip card payment. So if in the past, if you use Bank A card and you want to pay at a terminal that was issued by Bank B, you won't be able to do that, well, except if you pay with Visa or MasterCard or all those credit card schemes. But if you have a debit card issued locally, you won't be able to do that. So now it is possible at a small fees that is capped by the central bank. And then as we work through the card interoperability, we realize that now people are also moving towards mobile payments. And so there when the Bakong project came about, which bring interoperability for banks and payment service provider, for basically everyone in the country, and allow user to send money to each other in an efficient and safe way. I would not dive too deep into the bagong unless in terms of technology, unless you wish to. But I think one of the lesson learned, and that's linked to your first question, is that when the regulator jumped into this space, initially it was just for oversight, regulations, and so on. Eventually, when you see inefficiency, you can't help but jump in and do something yourself. And in this case, it's the Cambodia share switch as well as the bagong. And the problem is that the private sector, the good lesson learned one is that it's good to start early when the system, there's no one big player, a few big players standing out. In which case, I think it will be very difficult to bring them in together because they already have a big share of the market and there's no point sharing this with others. So fortunately, we were able to start quite early, although not early enough, but quite early, and we were able to bring everyone on the same page and start this initiative. The second lesson is that communication is very important, because a lot of the time when you have the regulator jumping into this space, they will see you as competitors rather than an enabler. So when we started off, a lot of the players were asking about the pricing structure. We're asking what are we going to do with the system? Are we going to eat out their profitabilities and so on? And that was really a very important aspect of this project, is trying to understand that we are not there to compete with them, but we are there to give them an ability to, or an infrastructure, connect them to each other. And then at the end of the day, competition should be based on the quality of the services that they provide, and not just merely on acquiring new customers and sort of lock them within their own ecosystem and not allowing them to talk to others. So it's kind of like a pocket of monopoly in a way. So what we try to do is to open up that fences and let everyone speak to each other.
Thanks a lot, Sarah. That was really, really interesting. Lajos, what do you think? I was thinking of the example of the Hungarian instant payment system, which you implemented last year as a good example, but perhaps you'd have other examples in mind also.
In the last 10 years, we are basically always in a development project. In 2012, we have introduced in Hungary the intraday clearing, so with the 5 cycles and then with 10 cycles. We have finished this project with the banking sector, and this was also compulsory for everybody. So it was all the Hungarian payment service providers had to take part in this project. Then in 2015, we have introduced the forint to the CLS settlement system, which is it's not, payment versus payment for the FX transactions. And when we have finished, we have even not finished yet, when we have launched the concept of the instant payment scheme in 2016. And when we have showed this concept of 150 pages for the banking sector, of course, they were a bit shocked that we are just at the end of some projects, and now again you are coming up with new ideas, and the instant payment scheme is a much bigger step than, for instance, the intraday clearing was a few years ago. We called it dimension change, because you change the dimension in many aspects. And so we published the concept in 2016, and then we made a regulation on this in 2017. And this was a very simple regulation, valid for all the Hungarian payment service providers. We put one sentence basically in a central bank decree saying that from 2019, 1st of July, a credit transfer in Hungary must be executed in maximum 5 seconds. This is a really simple sentence. And of course, this created a lot of work for everybody. And we have created a nationwide project including the banking association, including the state treasury, the ACH, the central bank, and we were leading the project from the central bank. And the most difficult part of the project was that it was mandatory for everyone, you know. And you can imagine that in Hungary, we have large players with millions of clients and small players with a few 10,000s of players with very different type of infrastructures inside the bank itself. And this was difficult, how you can convince everybody to do the necessary developments to reach the deadline, which was set. The deadline was set 1st of July 2019. And we have also faced a difficult issue when the bank started to report to us concerning the deadline that the vendor market for this kind of softwares and services like NetBank or mobile bank and other kind of end user experiences is very concentrated. A few players deliver to most of the banks. And this created, of course, shortages in the banks because the deadline was the same for everybody. Therefore, they fight it again for the working hours and for the FTEs at the vendors. And what we have also experienced that to make a transfer in 5 seconds is easier than to operate the system 7/24. So in the beginning, we thought that the speed is the biggest challenge, but in the end, it turned out that the speed is today at the current technology is not a big challenge anymore. But to be able to operate without any downtime, because we also put into the decree that you cannot have any downtime for receiving the transactions. Only for sending the transactions, you have 24 hours per year. So, quite strict regulatory measures. But in the end, it turned out that if not on the first deadline, which was 1st of July 2019, but 8 months later, on the 2nd of March, the system could go live. Everybody, all the 35 Hungarian payment service providers were ready. And on the first day, we had only some minor incidents in the system. And on the second day, from the second day, no incident in the system. So neither in the central infrastructure, which was created by the Hungarian ACH, nor in the banking industry. And what we have seen from the numbers that we had 150 million transactions in the first year, and 96% of these transactions were executed in 2 seconds. Although the decree allows the players 5 seconds, but they don't use it. So 2 seconds is enough for the majority of the transactions. And the other interesting observation is that 1/3 of the transactions from the clients are coming in the not normal operating hours. So either at the weekends or late evening. So this is an interesting issue that people like it, they use it, and they use it outside of the normal operating hours. So my conclusion is that although it was a big challenge, it was a big project, but it made sense to make it, and it works. So this was my experience, basically.
Thanks a lot, Lajos. I see that there's a lot of questions. So I'll jump to your questions, so don't hesitate to add more. I also see people answering other people's questions, and I see Zhang, who's one of the experts on the course, so thanks a lot. So if anyone knows the answer to questions, don't hesitate to answer also on the chat. And perhaps let me jump to Sapnandu and initiatives in Singapore. Would you like to share one? And what are some of the key lessons you would have learned from it?
Well, I think I'm going to context my response to the questions I'm seeing on the chat. Well, we have, as I said, we put a pay now infrastructure, which essentially simplifies the process of paying each other into 3 clicks, 0 cost. You just need to know each other, mobile phone number, or national ID is the instant payment. So that's pretty much solves the account-to-account transfer. The QR payment is common QR. largely electronic payment infrastructure in Singapore has been addressed from that perspective. Of course, fintechs here are also building value-added services around that, especially infrastructure which stays behind the merchant. There's one thing of paying each other, but there has to be a whole digital transformation from the point you receive money to do the accounting and inventory management. There's a whole downstream innovations happening in Singapore, which is beyond just the process of paying each other. Of course, and then also the experience around mobile payments and cross-border transfers. So that's one piece. It's both a corporate and consumer. But there's a question around that. I think some answered each other, is around common QR across ASEAN. While that's a good thing, I think we should do it. But that doesn't really move the needle, because for a common QR means that you'll travel somewhere and able to pay, which is a good thing, nice thing to have. But these are far more complex than what we think consumers would like to prefer. There are credit card out there, there's reward points and whole set of incentive which comes through payment. And Fabian brought the point around B2B payments, large value transfers. They still have to go through the rails, which needs all the necessary AML, KYC things to consider. But I want to highlight to the audience a few things. We must not forget that historically, fintechs have made money by arbitraging inefficiency in the system. And there's nothing wrong in that if you have inefficient system, fintechs will solve it and you make money out of it. But as I said, in fact, Cambodia and Singapore work together on this FDI project, that if countries decide to make their public good payment system in particular efficient, that particular opportunity to arbitrage goes away. And you're forced as a fintech to think about, I should not be making money by just moving money. I should be making money by adding value to the process, that I understand what you're paying. Can I help you in your payment? Can I add new services to that? Can I offer credit? The whole set of value-added services comes with that, which is now happening, which is a very good progress in Asian market. So that's one piece of development. But we also still have to understand there are some non-negotiable issues here. AML, CFTE issues. Consumer protection, absolutely. This is critical because, as Fabian says, as fraud, scamsters, mispayment happens, we got to have a strong consumer protection measures in countries so that consumers are protected from possible issues around payment. Strong cybersecurity consideration. You cannot be compromising on those issues. So these are the other ancillary structure to build, not only domestic and overseas, which is going to be a lot of focus for us. And eventually, as I said, my holy grail is cross-border. Real test to your payment system is when you are able to get your citizens an opportunity to send money overseas at a cost less than $1. Till that time, work is still work in progress.
Thanks a lot. Let's move to the other topic, which is CBDC. I see a lot of questions on CBDC and cryptocurrencies. And I think that before jumping into those questions, let's clarify definitions. And first, who amongst the panelists would like to define what's the difference for you between CBDC and cryptocurrencies, or do you see any difference at all?
And at a very definition level, it is self-explanatory in many ways. It is a currency issued by the central bank. So it is central bank digital currency. Of course, in the form of digital currency, is not e-money, it's a central bank liability. And there is two kind of currency. There's a wholesale, which is interbank, large corporate pay within each other. And there's a retail CBDC. And I think that's, to me, is a safe definition of CBDC. While the world of crypto, to me, is still an asset, less of a payment instrument, because it doesn't, by definition, those assets should be called as currencies, because they fail in two out of three checks, they fail in 2 checks. So definitely that's not a currency in any form. to call a Bitcoin a digital currency. But yes, they're a digital asset in some form. But that's a question for you to ask. But CBDC is very straightforward.
And maybe to build upon that, why are central banks jumping on this? And everyone I know in a central bank, they all have a CBDC project, right? It goes back to the notion of issuance of money, right? I mean, you have public money and private money, and I think when central banks around the world saw that some private company was thinking about creating something that looks furiously like private money, not private currency, because I agree with Sopnendu. But then it's normal that people try to look at the role of money in the economy as a public good in itself, and the role of central bank in making sure that this creation and management of money is in safe hands, right? And of course, it could also create a debate about is the quantity of money finite or not, which if you are a crypto freak, you would say, you know, at least with some Bitcoin related asset, you know, it's a finite quantity. So all those macro policies that have been done in the past, they are criticizing that. So it's a bit, you know, we're not going to go into that debate, but I think it goes back to the origin of money. And if money is a public good, then it's normal that central banks are looking at digital ways to manage this for the economy and the citizens. I think that's and crypto is not a currency to the point of Sopnendu because of many factors. One of them is the volatility. It's not the only one, but it's one of them.
Thanks a lot. I think that it's quite widely accepted that central banks will move to CBDCs. But is it true or not? Do you think that, you know, we're moving to a world of CBDC? Is it the future?
I think the frame of question can be a little different. We should understand why we are doing it. I think that many countries, based on where they are, they have a different response, which is fair. You ask the question to Ceres, you still explain very differently if I ask the question to me. For Singapore, which has largely an efficient payment system, there's no compelling use case for a CBDC. I mean, what can you do with CBDC if my cost of moving money from account A to account B is 0? 3 clicks, all I need to know your mobile phone number, money reaches to you instantly, you get a notice, safe, secure within the banking rail. What can CBDC do for me in the retail space more than what I just explained to you? But I have a problem when it comes to wholesale, when it comes to cross-border transfer. Because there's a cost of settlement and FX and whole this thing. Can a wholesale CBDC solve that problem? And that's what we are pursuing. That could be an efficiency gain within the wholesale world, especially for corporate payments called delivery versus payment. Can it be atomically settled instantly between an asset transfer and a payment? Maybe digital currency is a way to do it. Payment versus payment. Can the atomic payment be settled instantly? Maybe in the wholesale world, we can solve that problem using wholesale digital currency. But I think my point is that should be a purpose why you are pursuing this exercise. Large country with a lot of population, broken infrastructure could consider retail CBDC, especially for direct benefit transfer. More hypothetical, maybe not hypothetical, larger scale could be an international crisis for refugees where there's no payment system. Maybe that's the place for issuing retail CBDCs for refugees who are in no man's land. So I think we have to come from the purpose and then look at can digital currency solve these issues.
Yeah, and perhaps let me ask the question to Sarah. Do you think we need CBDC? And even before that, is Bakong a CBDC?
No, Bakong is not a CBDC. It is a backbone payment system. And back to what Sopnendu's definition is that it's not a liability on the central bank. That's a very important definition. And I think I agree with Sopnendu in saying that if you look at the use case of it from the retail, if you have an efficient payment system, there is no use. I mean, the reason why we're thinking about moving it digital, actually from a user perspective, there's nothing cheaper than cash, right? As a user, it is, I mean, financially cheap. I mean, you're not talking about security, somebody can steal your money. From a central bank perspective, managing those cash, it can be expensive because you have to replace the banknote, you have to reproduce it, and so on and so forth. But if you could issue it in a digital form, then you can reduce a lot of costs. I mean, of course, there's the first time cost of setting up, but then you would tremendously be able to reduce transaction costs. So from that perspective, I think for one, if you want to use it to make your payment system more efficient, yes. And also there's the cross-border case that Somnandu mentioned, because once you do all the retail, at the end of the day, you know, there's the bulk payment that need to go somewhere, and you need to settle trade and so on and so forth. And I think a lot of the countries now are talking about local currency trade settlement. And that's in a very important aspect to consider the role of CBDC. You want, particularly in ASEAN, we also trying to promote local currency settlement, trade settlement among the ASEAN country. So we need to figure out how we could do that without having to without having to go through US dollars or yen or euros or even RMB. So that I think it will be a very good use case to look at. There were questions about ASEAN just now in terms of QR. There's initiative as part of the ASEAN Financial Integration Framework to have an interoperability of the national payment system among ASEAN countries. It has been in a long discussion. We have thought about a centralized, a central sort of platform where the different national switch will connect to one platform. So this is the traditional way, but now that people are talking about CBDC and so on and so forth, I think probably they are going to move towards that direction as well. But in terms of cross-border, Cambodia has launched last year, right before COVID, QR payment with Thailand, and I haven't even had the opportunity to test it myself because after it was launched, the border was closed, nobody can fly anywhere, but it's there available. We're now working with Malaysia. Hopefully we can launch it within this year. And Subnandu, if you're happy to hear that, we're now talking about the Indian National Payment Corporation as well. So yeah, it's quite an exciting moment for regulators, a lot of work, a lot of interoperability to work on, and also oversight. We will talk about system, but we haven't discussed about the regulations, the rules that need to be in place, and this is really, for me, it's mind-boggling.
Thanks. If I continue to push you a bit on the why CBDC. And we had a very interesting discussion the other day with Sarah. But for example, here I am in London, in the UK, and I can use my mobile phone to pay. I have a bank account. Everything seems to be working fine. Is there a real need for CBDC? Why this? Why all those initiatives around CBDC today?
To me.
So that could be to you, Sarah, or anybody else who would have a view on this.
I mean, in terms of use case, really at the moment, for developing country, I see a very good use case. For developed country, probably less. I mean, even though now developed country, I mean, Singapore can be considered as a developed country. Even if Singapore managed to set up a CBDC for cross-border, you need the other country to also have similar project in place, and you also need to work on interoperability between the two, and that is probably a long way to go. But I agree that everyone could start looking into it, but I think it won't be happening soon in terms of using CBDC for cross-border purposes.
And maybe if I can comment on the technology, I think back to the point of fraud, I'm sorry if I'm a bit stubborn with that point, but this new technology needs to address what the current, well, no, you will not solve it by technology only, but we need to look at this technology as a way to try and decrease the corruption and the fraud on the system, right? And I think the programmatic character of this technology, like Sopnendu was mentioning, allows you to put much more context around why this payment is taking place, what are the conditions for this payment to be synchronized with other things. Like if you do I come from capital markets, and as you know, when you sell a bond, you will only give the bond to the other person if they pay you at the same time. It is delivery versus payment, or it can be delivery versus anything, but it's synchronizing two things. So if that technology allows to do that better, provide more context about why is this payment done, actually, and then comes the privacy element of that, how far do you go, then I think it's a great technology to look at. But the use case, I think the use case is really country situation dependent. And the big question is, how far do you go in central bank digital currency? Is it a wholesale currency, i.e. like today, a several tier system? Me, Fabian, I have an account with a bank, and that bank has an account with a central bank, and the central bank have an account with a European central bank. Is it still like that? Or do I have an account myself, Fabian, directly with the Central Bank of Belgium in my case, and a digital account? If that is the latter, then it's a kind of a serious shock to the system, because then the central bank is not a referee anymore. It's really part of managing accounts of citizens, right? And that's a question. I don't have the answer whether it's a good or a bad thing, but it's a big shock for the system.
Just maybe a short comment on the CBDC. I am a bit puzzled with the CBDC, telling the truth. I think that most of the central banks are now studying this issue. And the motivation, which I have read in different approaches, may be very different. In some countries, the problem is that the cash is the king. And maybe a CBDC can decrease the share of the cash. If the commercial banking sector did not do it, maybe the central bank may do it, and then the social cost of using cash will decrease, and this is good for the economy. In other countries, you see that the cash is eliminated almost in the Scandinavians, and they have a problem that if the cash is not accessible by the citizens, then there might be a problem from this. Therefore, they should give some digital form of cash. And but for me, I'm very much in agreement with everybody saying that if a country has a very good infrastructure and gives good services for the payment service users, and I would say that in Hungary, with the creation of the instant payment scheme, and with the request to pay transactions and the mobile applications which can be built on this basic infrastructure, I cannot imagine that there is no better technology for CBDC. Only I could copy the current infrastructure. Is it efficient if I have two parallel infrastructure? It's a question mark for me. But of course, there might be other issues, not only payment service issues. There might be monetary policy issues, financial stability issues, and maybe there will be countries where you can say that from the payment perspective, we don't need a CBDC, but from better monetary policy transmission, we need a CBDC, because we would like to make the transmission more direct to the end users. Or from the financial stability point of view, it's better if the retail segment has a direct access to the central bank or not. You know, this is still under investigation in my view. And what I understood, that the motivation in many countries to investigate the issue is coming from the crypto world, you know, because we have seen Bitcoin, which is different from the central bank issued money. And we have seen the Facebook initiative, which is a global money issued by, again, a private entity and available for billions of people. And this created the central, or this, let's say, motivated the central bankers to think of this whole issue. And I am not sure in the end there will be in every country a CBDC issued, but we have to investigate this. In the Central Bank of Hungary, we are just before the publication of a study, which from the different aspects will define whether we in Hungary think that in short term or medium term, a CBDC should be issued or not. As far as I know, it will be published in July. So, and I see this in other countries as well, that the central banks are studying this issue. And, you know, the interlinkage between the different topics is very different, you know, financial stability, monetary policy, payment service, technology. This is very much difficult. If you think that you found a solution or a reply to one question in the payment world, then it may create another question in the monetary policy field or in the financial stability. So I think it will take a bit time until we will see real CBDC issue.
No, thanks a lot, Lajos. And I think it's a very nuanced answer that shows the complexity of CBDC. And I think, Sarah, you wanted to add
something. I wanted to add to Lajos' comments about CBDC. I think there's, besides a lot of uncertainties on the implication on monetary policies and the transmission mechanism of it, one thing is sure is that central bank in itself is already powerful. One of the most powerful organization anywhere in the world. And if you add CBDC, which is the ability to have a lot of data at the individual level, but also at the company level, and see the flow of money, you would make central banks even more powerful. And I'm not sure it is a good thing for central banks, because it can be quite distracting when you hold that much information, and you may lose sight about, you know, your core objective, which is price stability and financial stability.
There's a good article in The Economist recently that covered that, saying, are we asking too much to the central banks, right? Should they keep their distance and be a referee rather than being kind of the part of an engine really in the economy? So I think I don't have an opinion, but you're better placed than I do, but I think it's a good point. What is the role? You want to keep those central banks as independent bodies, right? That's a bit their role. So, I mean, CBDC helping or not, that's a question in itself.
Yeah, no, thanks a lot. There's a lot of questions, and when I ask a few, but we're not going to be able to go through all of them. There's quite a few questions directly addressed to some of our panelists, so we'll share with them after, in case you'd like to answer them directly. I think there's CBDC, Bitcoin, cryptocurrencies, blockchain. It's all very confusing because it brings together a lot of different topics. From we're talking about central bank, monetary policy, technology, etc. I think there's an interesting question about blockchain and DLT. Is CBDC something that has to be linked to DLT or not? And I think that's an open question for perhaps Swapnandu, Sarah.
Well, by design it is, and if you are programming a money, to me that's much other definition of CBDC. If you're programming a money, you need to have infrastructure like DLT to come along with it. So yes, that very much part of the construct and design. But I think DLT per se has now diverged from the word digital currency in a big way. They have gone and created a whole set of economic opportunity by creating a trusted layer of provenance, registries, decentralized way of tracking things. So I think that whole DLT as an architecture has moved away from the digital currency narrative in a big way, because the technology companies were quite smart. They realized that if they stay close to digital currency, they'll go nowhere. So they just took that architecture, took that design, and started applying to traditional way of managing things centrally to decentralize by creating trusted node, supply chain provenance, asset registry, blockchain issuance on DLT, all this stuff. So that's what I think happened in the DLT versus digital currency. But today, still that if you are writing a smart contract, if you are doing a decentralized finance, 4 things comes into play. There's a identity, could be a self-sovereign identity. There's a what you call as a codified regulation. There's an underlying DLT architecture, and there are a whole set of considerations of the process itself. So yes, so I think that's where it is today. But I want to just close. I think sometime just to, because we don't have much time, I want to leave audience with two new things to worry about. Not worry, to have some interesting follow-up in their mind. It may not be a CBDC in future. It could be a DC itself, a digital currency issued by a commercial bank. Now, historically, why do you think the payment has been such a mess when it comes to commercial banks in a wholesale space? Because every bank protects their ledger. And you don't debit, credit, debit, credit, debit, credit, and you manage all the process. Imagine if banks trust and create a public utility, they're sharing the ledger. You don't need to debit, credit every account. It can be atomically settled. So that could be a commercial bank issued digital currency, which can be a new way of commercial bank engaging in this whole process of settlement between each other. So you got to start thinking and not get boxed by CBDC or crypto. You have to look at the possibility of redesigning some of the principles and find a better and more useful, purposeful use case in this whole space. So that could be another way to look at pure digital currency issued by a commercial bank. In fact, I think one of the question here, the 5 phases we did, we ended up in a public, in a commercial infrastructure by JP Morgan, Temasek, and DBS called Partior. It is in fact run by a commercial bank. What it does, it provides a public infrastructure as a public good, or not public good, for commercial purpose, to provide an opportunity to issue digital currency by commercial bank, and hopefully you use as a settlement infrastructure. So there are these possibilities, which is interesting. So we should not lock ourselves in one narrative for the future discussion, but I want to leave with one warning. Out of the 10 reasons I can articulate for my friend Dante in his recent LinkedIn posting, there are 5 reasons why you should worry about digital currency. It is the word technology, cyber, vendors, the technology obsolescence, all the technology risks are deeply into this whole digital currency. And we should not forget that these are new risks, which doesn't typically associate with cash.
Thanks a lot, Samnandu. And I love it whenever we discuss with you, you always open a new door onto more thinking. So that never stops, and that should be the next discussion. I think, Sarah, you wanted to add something?
Oh no, I just wanted to say, regardless the technology used, and I mean, I'm not well versed with blockchain, and I'm not even sure if blockchain and DLT is interchangeable as a terminology. But I think the important thing is finality of the payment, and at the moment, I think only the blockchain technology is able to do that. If eventually there's other technology that allowed this finality to be immediate, as when you give cash to someone and the other person accept that cash, that's final. So when you send money to someone and there is no, so it's peer-to-peer, there's no sort of central clearing, you have to wait for the bank to have liquidity to settle, etc. That part is where the use of blockchain is interesting, and where when you explore CBDC, you want to achieve that immediate finality.
Thanks a lot, Sarah. And I think now we're reaching the end of our panel, which was hugely insightful. So thanks a lot to to our speakers. And perhaps I'll ask each of you, perhaps in 20 seconds, what would be your main message in today's world, payment, regulation, all of those topics. Perhaps Fabien, would you like to start?
That will be very quick. I think financial inclusion and payments to the poor or people who really need the money, migrants, shouldn't be an afterthought of the way we design the payment system going forward. And if there are mobile devices everywhere right now, and there are technology that can make cross-border payment cheaper, especially for also small amounts, I think that should be part of the design and not an afterthought. So I'll just say that.
Thanks a lot, Fabien. Definitely really important. Lajos, what would be your message?
Yeah, I would say that the last 20 years for me in the payment industry was not boring at all, but I'm sure that the next 10 years will be much more interesting.
I think I would agree with you. Subnandu?
Well, I will take a leaf out of Sere's comment. He talks about finality of payments. I talk about finality of payments and asset transfers simultaneously. That's the magic of digital currency. That's the magic of DLT, that you have an asset ownership and payment happening exactly same time.
A lot of food for thought. Thanks a lot, Subnandu. And Sere?
I think my message would be that whatever you do, make sure it's useful for the societies and protect the environment. Whatever technology, whatever service or product, it needs to be fair and transparent. And the reason why I embark into this is mostly for financial inclusion's sake.
I think we can't find a better way to finish this panel on this message. So thank you very much to all our panelists.